Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Cameron Findlay, chief economist at AmeriSave Mortgage, a mortgage lender known for pioneering the truly digital mortgage experience to borrowers. Cameron, it's great to have you with us. Welcome to Trade Talks.
Thank you. Good morning.
How is the current environment of rising interest rates impacting home building, home prices, inventory in the near term, and if you think a little bit longer term?
Yeah, big impact. Obviously, I think everyone's aware that rates are up. I think the biggest thing is that there's a lot of volatility in rates out there for consumers. So I think what it's created is a disparity for the lending community of people being able to find, conformity in mortgage rates. I think everyone's been used to this, 2 and 3% kind of interest rate environment, and we've recently, far exceeded that. We're in the 4 to 5% interest rate environment now. And so it's changed consumers' behavior, their buying behavior. Specifically the types of homes that we're looking for. And I think with inventory still tight, what you're seeing is a lot of consumers putting a lot of price pressure still on the bottom end of that curve. And so I think, price stability is still there. But I think certainly with some of the economic headwinds that we have with respect to inflation and things like that, that's putting pressure on those prices to come down as rates are rising. And you've got that dual pressure from the inflation results that we're seeing out there in the market.
Well, what should you do if you're a first-time home buyer today? Do you buy now? Do you wait? Are there alternative forms of trying to finance a mortgage?
Mm-hmm. Yeah, I think a good question for consumers to ask is how long do they want to be in the home, right? So I think specifically if you're somebody who wants to be in a home for only a short period of time and you're planning to move again, maybe renting is your best option, right? I think certainly for those who are looking for the long-term commitment of a home still, in excess of 5 to 7 years, a lot of opportunity out there still, but there's certainly pockets. And I think the geographic dispersity of pricing too has created, confusion for a lot of people. A lot of people moved from the West Coast, for example, into other states like Texas and Florida. And what you're seeing there is, those prices in those other regions that traditionally were way more affordable have become less affordable. So I think specific to first-time home buyers, it's made it much more challenging for them. And so, that down payment, that saving for that 20% is a lot more challenging. That 20% number has gone higher. And so that's making it less affordable for those first-time home buyers, making it harder for them to get in the market because you've got all these other consumers who are out there who are also, they're not first-home buyers, they're experienced home buyers, and they're still trying to get in the market as well.
So Cameron, what are the most in-demand markets for first-time home buyers, and what does the inventory landscape look like at different price points?
Yeah, I think what we've noticed in some of the data is that, I think specifically on the lower priced homes, it's more difficult for consumers, is that inventory is less deep, it's shallow in fact now, to the point where price stability, like I was mentioning earlier, it's increased quite substantially. I think on the higher price end side, like in the $1 million plus market, it's actually, we're starting to see some affordability come back into that, relative affordability come back into that space. The inventory levels are starting to build a little bit more and prices are coming off a cliff a little bit more in that sector. But I think specific to first-time home buyers, there's a lot of affordability initiatives that the FHFA, which is the governing body that controls the two government-sponsored entities, Fannie Mae and Freddie Mac, are bringing to the table. Those affordability initiatives are specifically targeted at first-time home buyers. So the Home Ready program with Fannie Mae or Home Possible program with Freddie Mac, both programs we offer at AmeriSave, incredible for consumers. In fact, we just recently launched the Home Ready program with Fannie Mae to try to drive home that affordability initiative.
Let's switch gears a bit and talk about people who already own homes. With home values at an all-time high or close to it, is now the time for homeowners to unlock their equity to pay for either renovations or pay down credit card debt or consolidate in some other way?
Yeah, I think, look, equity extraction technologies have expanded in the last couple of years in the mortgage space. And so what that's created is an opportunity for consumers to really understand better how they can get the most equity out of their home. And so we've seen an actual expansion of home equity lending. Digital equity mortgages are becoming more common out there. So when you do your research on those, just make sure that you're talking with qualified lenders. We offer one as well. It's a digital home equity mortgage. But I think there's plenty of options out there. I think what you'll notice in that space is that credit score, above all, trumps most things with respect to the rate that the consumer will ultimately get. So really manage closely your credit score when going into that home equity strategy to make sure that you're in the best possible negotiated position.
And finally, Cameron, what are your expectations on how much longer the Fed will continue to raise rates to combat inflation and sort of get the economy equalized again?
Yeah, great question, Jill. It's central to just about everything going on in the economy today. I think, the Fed are actively trying to, manage short-term rates. I think specific for mortgage rates, though, our expectation is the Fed will continue to try to drive and stamp out that inflation concern that they have. They have a dual mandate at the Fed, so they're trying to achieve that. Their influence, however, on the long part of the curve, the part where mortgages are created, that's really driven by perception. And the perception right now is that the Fed may have, done their job. I think the perception now on the long end of the curve is that we're going to wait and see. And then I think if inflation comes back in line, I think what you'll probably see is the potential for a debt rally, which means prices up. And for a consumer, that actually means rates may come down toward the latter part of the year. So Q4, I'm actually expecting rates to stabilize or even the potential for rates to slightly decline.
All right, Cameron, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Yeah, terrific. Take care.